Excellent. So we've got probably not a very long talk, but we're just going to go through some of the nonsense that we deal with day to day. So maybe a bit of background to ourselves. If I introduce myself, I have been working in tax for onward to 20 years now. I started, you can tell I haven't lived in Scotland all my life. I went to university in Bristol, trained down there, and one of my first sort of big clients was Urban Animations, who was sort of at the time fairly instrumental in getting film tax relief introduced to the UK. So that gave me quite a good grounding in film tax relief, and then when the government was happy that was working quite well for films, it really helped draw a lot of businesses into the UK. They wanted to put that into other industries, so the first one they chose, obviously, was video games in 2014, and since then I've been working very closely with video games to help them claim sort of tax incentives, which are out there if you're developing a new game in the UK. So that's a bit of background to me. I've got Gemma here as well.
So hi there, yes, my name is Gemma McNee. I work in the finance function support team at RSM, so my role's slightly different from Will's. I work with supporting clients that maybe come to us and ask, what do we need to start a business up? It could be from, help, what do I do? I need someone on a payroll, or they could have, how do we even start a company? I do a tax return just now, but my business has grown quite a lot. How do I even go about it? So from that, we can see sometimes how clients grow so quick that within 2 years, they're looking to get investors in their business and look at a growth plan that in 5 years, they want to sell their business and make the most they can out of this business. So again, we link closely with Will and the tax team to say, look, this client's, look, this is what they're wanting. How do we get them there the most tax efficient way that everyone likes? And also just to make sure everyone's on the same page and working towards getting what the client ultimately needs.
Thank you. So I don't want to overwhelm you with things, but I quite like this slide because it gives you a bit of a life cycle of a journey of any business, particularly here we've got a video game one. Now, everyone concentrates on the end, usually. You've got someone who's very ambitious and who wants to make a ton load of cash at the end by selling a game for loads of profit. But actually, there's so much you need to do first to get there. And it's these bits at the very start which you really need to get right. So making sure you've got the right company structure, making sure you've got individuals working with you who bring the right dynamics to the team, making sure they're incentivized properly and buy into that long-term vision, and then making sure you're structured in such a way that you can claim all these quite valuable tax incentives or grants from the government, because there are people out there who will help you, but you'll often have to be a company to claim those benefits, and you'll need to be able to demonstrate that you have good financial systems in place to be able to articulate to those investors or people giving you grants how you will invest that cash, so they can actually make sure, and they've got some sort of some basis for giving their money away to you. So we're not going to go through all of these. I just put it up there because I quite like it. Gives you something to think about as you're going through that journey. But first off, we probably want to think about how we set up our company. So I'll get Gemma to talk to that.
There we go. Yeah, so as Will touched on, we've got this starting up in the UK as a sphere here. So one of the main things is, as Will's mentioned, if you're working as a sole trader, a lot of things probably need to get transferred into a company to be able to take all the tax reliefs that Will's going to touch on later. So some people might not consider that, but if it's something that you're thinking of, it's best to do it sooner rather than later, that we find with quite a lot of cases. I'm not going to go around it in detail. This was just kind of trying to put into perspective all the different areas that need considered before even taking the next step. So there's a lot of regulatory requirements, such as if you meet a certain threshold, you need to be VAT compliant. If you're wanting to pay people on payroll, you need to set up a payroll and register with the revenue on that. Again, with employment contracts, there needs to be one on day one of the employment. So if a lot of things isn't in place from that point of view, you can get caught in the future when you're looking at different reliefs and things. Again, just moving around, there's a lot of different things to factor. So even things like sending an employee abroad, you would think, right, there's not any issues to that. But as we'll touch on potentially today, don't know what's in the tax slides, as we realise, some clients do that without even speaking to us, and then they don't actually realise the tax implications on the person as an individual and the company. So as we come round the circle here, that's saying things like your year-end accounts. So if you create a company, there's legal obligations, not just your accounts. There's a few different various obligations that you need to be registering, or your company can get struck off. You'll get a bad reputation for the company, which ultimately, if you've got a website, your name's going to be out there, the company's going to be associated with it. It's all on public record, a lot of information. So there's quite a few key areas that you want to be considering when you're looking at a company, formatting the company, but also getting off in the right step, because it kind of goes into your fundraising point of view as well, which is the next slide. Next one. So again, trying to look at forecasting when you're looking at a business. To secure some funding, there's obviously fundamentals like we've touched on to get in place. But again, there's some key areas that you're going to want to focus on when you're going into fundraising. So you'll be asked when you're going to start generating income, how long is it going to take you to receive it, because you might be working for someone for a while and you're not going to get that income right away, or the contract might be structured in stages. What costs will you need to pay? So you might need to pay someone up front to get them on board. And when will you need to pay them? Because not everyone's going to want to work for you for a while without getting either paid up front or being paid as they're doing it, which if you've not got funding in, that's money going right out straight away. So moving on to the next slide. So again, just things to think about if you were going out for fundraising. You want to go and tell your story. You want to be able to speak to investors and say, this is the vision, this is where we want to go. But having the information from the plan, you want to have those questions covered to be like, I have thought of this. You don't want to go to that with them asking questions and you're at a stumbling block. Again, existing investor management. If you're already speaking to investors, kind of gauge how they feel about other investors coming on board. There might be people that want to invest in your business but want to be the only ones to invest in your business. There might be ones that are happy to go with other people, but again, it's just trying to cover all those blocks so that you don't say go with one investor, then you're stuck with one and they're not open to other investors, which is potentially something you need to be able to keep growing your business. Looking at what money you need to raise and then the spending plans for that. Because again, like was touched in the slide before, they're going to say, well, if you've got these costs up front, how are you funding that just now without this additional funding? Again, linking into looking into the future, you want to own your own IP and related assets because that's protected. It's what the company's worth. Again, if that's not protected, you could be speaking to someone about your great idea and what you've got all this in the background. If they create it and you've not got it secured, that is a very big risk to you. And again, being due diligence ready. So things like all the questions from before and things like if you've got employees, well, have they got contracts? Because the first thing an investor will do will have a due diligence process done on you, which will be looking into everything that your business has. Are you doing everything right? Because if there's something wrong there, that's a big... Some investors, if they see one thing that's wrong, and you might tick the boxes for 10 things, but one's wrong, they would just say no from the start. And again, making the right connections. So keeping, as there's different fundings that put out saying investors, there's different organisations that say what investors are wanting to fund into different businesses. So it's good to know what they are. Again, you've got a current network in the gaming community. So things like if there's one that's been mentioned, oh, we got investment from this, that's a good one because the investors might just not invest in one thing. They might be happy to invest in a few different things. So just because they've invested in something that you know of, it's open to opportunities that they might be wanting to invest in 6 businesses to spread their risk as well. So moving on to things to consider post-raise. So again, once you've got your fundraising, you don't want to just think, right, that's fine, I've got this pot of money and I'm all good. Again, when you've went to these investors, you've got a plan in place. You want to plan your spend, you want to monitor it because you want to make sure that you're getting the return that's one expected for your investors, but also for yourself as well, looking into the future. There's a lot of things in the, around the, it's not just about the cash as well. There's a lot of environmentally regulations coming in just now, which we've seen with a lot of clients. So a lot of our big clients need to report on their carbon footprint, which is public knowledge, and a lot of clients don't realise they need to do that, but that can put creditors off that, or investors that look at those public documents and see, oh, this is their carbon reporting and not off. If an investor is really high on the environment, and that could be, again, a quick no-go for them. Aiming for profit and proof concept as early as possible. On that, you want to be looking at what's your growth plan. Are you looking at saying, right, we want to hit X profit in 5 years, or this is a slow growth business, and looking at what your investors want? Because ultimately, if you've got investors coming in, which links to the next point, you want to be nurturing that relationship, but making sure you are on the same page. There could be disagreements, but again, you need to be on the right page from the start, which is key to setting off to picking the right investor or making sure the right investor's coming into your business. And again, this all leads to international opportunities and growth objectives. So if your business is growing, you've got investors coming in, it could be that you've got an extra exit strategy in place, but it could be that they've got other connections that can make it being a UK company growing, which we see quite a lot. We're linked up with an international firm, and the amount of things that we see from the UK that actually grow arms and legs to, like today I was on a call with a UK company that actually we had to speak to our Netherlands branch because they've actually just acquired a business there and it's grown arms and legs. We see that quite a lot in our business now, so there's quite a lot of scope for that international opportunities and growth. So it's just thinking where, from a starting point, here we are, and then this is kind of where you could go with the growth and with investors fundraising into your business. I think that takes me on to your slide.
Yep, thank you. Just me now. So, I mean, that's best case scenario. You've got lots of funding, lots of income coming in, and hopefully it's all happy days from there. Unfortunately, and particularly at the start for a lot of startups, you're making losses. So actually, why is tax important? Well, because tax actually is only based on your profits. If you're making losses, then why do you need to worry about tax? I've got a few things I was going to cover here. First one was investor reliefs. So I'm not going to go through in detail any of these slides, but some investors can get a huge amount of tax relief for investing in qualifying companies, which will include people who are developing video games. So if they put money into you, they might not have to, or they could recover, say, the income tax they suffered on it. They might not have to pay capital gains. All that good stuff makes you quite an attractive investment to them. But conversely, you'll need to meet certain requirements. You might need to get approval from HMRC that you meet the certain criteria to these two ones. I mean, the schemes we're talking about here, we've got seed enterprise investment and then normal enterprise investment. I guess you can see the obvious differences that seed's really for much smaller entities starting out their growth journey, but both are there, and it's important to get them right if you're looking to get investors on board. Next one, this is my bag. So video games tax incentives. Again, I wish it wasn't called tax. I wish it didn't have tax in the title because everyone thinks you have to pay tax to get a tax relief. But no, all you have to do is be a qualifying company and make a qualifying game. So a qualifying company is someone in the UK who's got the primary responsibility for developing that game. You don't need to be the one publishing the game, but you need to be the one developing, having the artistic input to that game. So I guess if you're subcontracted to do work for a game, then you probably can't claim the relief. But the people who subcontracted the work to you probably can claim the relief. So there could be a bit of a negotiation to have there, because you might be able to say, well, actually, you're able to claim this relief. You'll be claiming the value, which actually is 20 pence in the pound, back on the costs that you're paying me. So maybe you could up my fees a bit. So that's a qualifying company. The next one's the qualifying game. So the game first needs to get a certificate from the BFI to certify that the game is British. That's not actually as hard as it sounds. You've got, I think, 31 points available. You only have to meet 16 of them, and you still get quite a lot of points if your game is, say, based in a nondescript location. My favourite example, going back to GTA, is that GTA is a British film for the purposes of the BFI, even though it's clearly set in the US. But because it's got English language, I think it has a few English characters. I think even Big Ben may have featured in one of the earlier versions. That helps demonstrate that it is British. So I've very rarely come across a game that doesn't qualify as British. Certain games are excluded, so if your game is purely for marketing purposes, obviously most games have some form of marketing in, but if it's just to market a certain product, then that wouldn't qualify. And again, if your game is for gambling purposes, then that wouldn't qualify. But I think for what most people would be wanting to make in this game, in this room, your game probably does qualify. And if it does, then you can claim 20% in cash back on all that development expenditure that you're incurring on that game. So it's a really valuable relief. There's no strings attached. You can spend that cash on anything you want when it comes into your bank account. If you can't claim video games tax relief because, say, you're a gambling game, then there may be another incentive you could claim. Research and development is for any company in the UK who is developing or overcoming technical uncertainties when they're doing their work. It's not quite as valuable. It's generally around 15 pence in the pound at the moment, but it is there if you can't claim video games tax relief. So it's certainly one to bear in mind as well. There's a whole heap of admin that comes with both these reliefs, but that's probably not something for today. That's something for us to do with our exciting accountant's hats on. And with that, that's probably all we wanted to cover for now. So thank you for your time. Sure. Yep. Yeah.
See with SEIS,
Yep.
if your company's older than the 3 years,
Mm-hmm.
are you able to make, is it like a special vehicle company or something to, if you want
To
make
transfer it. That can be difficult. So it's not as simple as just transferring it to a new company. I've come across companies that have been bought, and they've been around for 7 years or something. They got bought by someone else, and HMRC looked back to their original ownership. So there are ways of doing it, but you need to demonstrate that that new company is doing something completely new. So it can be done, but you've still got the other relief if you're not able to get the seed one.
What would you say is your topmost piece of advice for a company that's just starting to start tracking and start looking for support with?
Your first probably, well, you can correct me if I'm wrong, Gemma, but I'd say you want a bookkeeper who can make sure your income and expenditure is being captured properly. They're the ones that can help you understand income and expenditure. And what a lot of businesses don't realise that actually cash is key in those early days. A lot of companies make loads of profits but fail because they don't have enough cash in the bank. So you need someone who can support you and give you that information, and that's probably the bookkeeper who I'd recommend when you're starting out.
What's a common mistake that when people are trying to set up a business, like, people, not people who are just like, have no, people who have studied, people who have like, actually looked at the actual, the world and, seen this and read every book and talked to people. What's still a common mistake that people that usually bump into until they actually experience it?
I think it's making sure you're speaking to the right people. So I'm not trying to sell RSM particularly, but we do come across people who maybe rely on an individual for all of their accounting advice, and actually accountants don't know everything. I mean, I certainly don't. I'm going to ask Gemma loads of questions if I'm out of my depth on accounts. So relying on one person to deal with all your finances is probably quite a risky area. So I've come across video games companies who had an accountant who'd never heard of video games tax relief, and because of that they'd missed out on years worth of cash. So yeah, it's doing a bit of research.
One more question.
If you
Sure.
were to, well, I'm a student, and what would be the tipping point when we should approach a company like yours?
Mhm.
At what point should we sort of look into?
Yeah, well, I'd like to think that as a profession, we're all fairly approachable. So I would always have a conversation with anyone. That's not to say I could work for everyone, because I guess I've got a base limit of how much it's going to cost. But if I can't do it, then I'll try and find someone who can do it. At least if you're speaking to people who have that specialism, they can at least signpost some of the key risks and get you started along the right track, even if they can't help you straight away. So yeah, don't be afraid of speaking to anyone.
All right, everyone, give up for a moment again. Thank you.